Okay. Well, I hope you guys like the elevator music. I am recording, so therefore I will drop the recording for you guys. I will post it on Patreon and I'll post it in the Telegram chat as well. I get obviously a lot of questions regarding sizing and risk and how to manage all that, and that's what we're here to talk about today. I guess the appropriate topic or title of this course would be called "Sizing to Win." All right. The first, the very, and what spawned this is that I get a bunch of screenshots from you guys every once in a while where you're like, oh, I'm stuck in this position. Oh, what do I do? I shouldn't have bought this stock, or I shouldn't have, I shouldn't have, I shouldn't have averaged down too much or too little. Maybe you're in a winning trade and you don't feel like you making enough money because you don't have enough size on, right? Or you just put too much size on and now you're stuck in a position, you're 40% down and messaging me what to do. All right. And I'll tell you what I do. All right. I'll tell you everything I know when it comes to appropriately risking whatever amount that's proportionate to your portfolio. All right. That's the first thing that you guys need to figure out right away. All right. Don't take another trade from our group until you have all these things figured out. All right. And this is from experience. This is really from experience. This is not anything I read out of a textbook. It's just what I've learned throughout the years and what I can share with you. The first thing you need to do is determine exactly how much you're going to put on for each trade that we announce or that you take personally, right? Maybe you grab an idea out of my charts. Obviously, every single chart that I post, it doesn't mean I'm in the position, right? It just means like, hey, things to watch, levels to watch, right? And you need to determine how much money, how much dollars per trade, right? Especially when it comes to contracts, when it comes to options. Okay. So let's say, for example, all right, let's say you have a smaller portfolio, all right, and your portfolio is about $10,000. Okay. That's okay pour. You could definitely grow that, but you'll have to be very careful with the $10,000 portfolio, especially playing options. All right, because obviously time is against you. The theta and delta is against you. The range control in certain, when we hit certain markets or market structure, those things can absolutely hurt you. And if you know options, time decay is always against you. Look at my coin call, right? I mean, I never let things get too out of control. But coin is somewhat of an exception for me. But anyway, we'll talk about coin in a second. So honestly, if you have a $10,000 portfolio, you should probably not be in any position more than 10%. All right. So that's $1,000. Now, that would probably mean for you that you're only going to buy one contract off an alert. Okay. Because the contracts that we buy are typically 5 to 10. All right. Some cheaper contracts, 2 to 3. Okay. And then you could buy 3 of those, and that's okay too. Okay. You need to determine upfront what that maximum position is going to be, and you need to stick to that rule. It does not matter how great you think that stock is, or your confidence level, or if it's earnings, or if it's whatever the case may be. Okay. It should be 10% or less. Okay. Or even much less. I think 5 to 10% is probably your max. Okay. So that means in a $10,000 portfolio, it's going to be it's going to be $500 to $1,000 on a single on a trade. Okay. And in addition to that, all right, my rule is that I never have more than 50 to 60% of my capital or available cash into the market. Okay. So typically speaking, on an average day-to-day basis, I'm only playing, all right, or I'm only trading up to about 50, 60% of my portfolio size. Okay. Or my trading portfolio. All right. So let's say you have a $10,000 portfolio, right? So you're always going to have about 4,000 available in cash. You're going to put on 5,000 to 6,000 for swing trading purposes or day trading purposes. It's up to you. All right. You'll notice that I don't always have too many positions open at the same time. I get a little HDHD. So for me, I don't, if you open up my port, it's pretty clean. All right. It's not like I have 25 active positions and managing 25 positions. You'll never catch me in that spot. It's too much. All right. Too much to manage, too risky, and way too stressful. Okay. So if you're working with $10,000, again, 5 to 10% is your max, but you're not trading your entire portfolio. Okay. In addition to that, let's just say you have 100,000. Let's say your port's 100,000. All right. You're a big baller, 6 figures. Okay. Great. Fantastic. Then your trades honestly are never more than $10,000 per position. All right. So you guys need to understand that. All right. Next thing to do. All right. So you got to determine that up front. And now that you have determined that up front, you need to look at the way that you actually open the position, because a lot of people, what they typically do, and I find this, the same story each time, is let's say you're dead set on open shares, right? Because you believe in Eric Jackson or whatever his name is, okay? Or you're going to buy shares, you're going to buy options. This conversation does not matter whether it's shares or it's options, okay? Please, it doesn't matter at this point. What matters is, again, your sizing, right? So let's say, for example, all right, you have $100,000 portfolio, right? And you think that, all right, Tesla is going to go. Okay. Tesla is going to go, and you got your levels. I hope you're using technicals. All right. I hope you know your levels. I'm assuming at this point that you guys know where your levels are, where your stop losses are, where your potentially take profit levels are. That's I'm operating that under that assumption at this point. Okay. So let's say $100,000 portfolio, 10,000 on Tesla calls. Fine, whatever. All right. You need to also detail. I will tell you what calls, and it's a month out, 3 weeks out, whatever it is. Okay. All right. So so what I would always recommend when you're buying Tesla or any stock, right? Let's say it is that $10,000. You're going to put 10% of your portfolio into this trade position. Do you need to start the position with $10,000? Okay. A lot of people do this. Okay. A lot of people say, all right, John says buy Tesla. I'm going to put 10,000 into the position right away. And okay. And typically what happens, all right, as soon as Tesla dips, you're down 10%, you're down 15%, you're down 20%. Okay. You're down 20% off a $10,000 position, which means you're down $2,000, and you start to get a little panic. Okay. So that's what you should not do. Instead, put 2,000 of the 10 in the position first to test out the waters. Okay. And what you can do, and this is what I'm going to share with you, there are 3 ways to average into the position. Okay. Number 1, dip buy opportunity. Number 2, range buy. Number 3, strength buy. Okay. I typically do not strength buy because it ruins my averages. All right. I would typically just let it ride, but there are situations where you could strength buy. So for example, let's talk about the QQQ. We'll just start with, let's start with Tesla. All right. So let's say, for example, all right, I know some of you guys bought at 355. I just know that some of you guys bought at 355. All right. So let's say, for example, your plan is, all right, I'm going to buy the 355 because I know it can go higher into 358, and you have an upside target of potentially 370, 368. Okay. And that's a pretty good plan. Okay. And what some of you folks do is can just drop $10,000 at 355 and hope for the best. Okay. And so Tesla is now at 342. You're down 8. You're down 13. All right, from your buy point, or whatever the option contract is. Let's say the delta is, let's say the theta is like I don't know, a dollar or something like that. All right, so you're $13 off your contract that you bought for $2,000. So you're kind of in the water, a little bit in the water at this point. And what happens is that people will see this drop and say, all right, let me go ahead and average in. That's one of the worst ways to actually average in. And the reason is because we know that 355 and 340, 350 was support. Okay. So your plan, all right, your plan should have actually been, okay, let me buy one contract here for, or however many contracts, let's just say for $2,500 using our $10,000 trade example. All right. You buy one contract, two contracts, whatever it is, $2,500. We'll just deal with capital here. $2,500 here. And what you're going to do is you're going to say, all right, my drop dead, my level, all right, is going to be 349. All right. So you're going to give yourself $6 cushion to average into the trade, or get stopped out. All right. So you had a plan to put $10,000 into the trade. You only put $2,500 and you only lost $500, maybe $400 on this trade because it broke your level at 349. Okay. You're not doing one of these things. You're not buying one contract here and buy another contract here. Okay. You need to have those rules up front. All right. So this is a way better way to go. All right. Than saying, okay, well, I'm going to put 10,000 at 355 Tesla, hope for the best. And then I'm going to buy more contracts if it dips to 342. That's too wide of a range of a stop loss. Number one, right? So you can't say I'm going to put 10K here and I'll buy another 2,500 here. And then guess what happens when you do that? Then the market goes lower. And then you are stuck for a very long time in that position. You've over exceeded your capital allocation to that position, which was $10,000. Now you got $12,000 into the position. You're underwater. All right. So, all right. Well, let's see. Okay. Let's say hypothetically speaking, you're still confident in Tesla. All right. And your trading plan called for a 342 dip buy. Okay. Which is actually okay. You're now probably down 25-30% on your contract at this point because it went from 355 to 342 now, or 343 now. All right. So one thing you could do here is that, okay, one thing, you are down. You haven't put more money into this contract at this point. Okay. All right. Which is good, which is fine. So what you could say now is that, okay, I won't average into this contract, or I won't buy more unless I can see strength back above 348. Because why? You got an FEG created here at 340, between 349 and 345. One of the worst things that you could do right now is say, I'm going to buy more here, hoping that it goes back up here. What you actually should do is buy when it actually inverses. We're using technical rules there, right? We're going to inverse at 346, 347. Does that make sense? Okay, because what's going to happen is that if you start averaging in here, and what happens to the stock, right? It's going to run right into this area here, 346, and come back lower, and then you're stuck even more, right? So now you got what? $5,000 into the position. All right, you average down. You're about 20% down now. You're about to get stopped out eventually. Okay. And then you're going to DM me, John, what did I do wrong? Okay. So this is very, very simple, I hope, for you to understand. Okay. So let's go to another thing, another stock here. We'll go with the Qs. Okay. So there are ways to dip buy, and there are ways not to dip buy. Okay. You take a look at what's happening to my coin trade right now. All right. Am I buying more coin at 306 just because it dipped to 306? No. Why? These contracts are expensive. I don't want to put more money into this position that's already down, but I'm in the position because I know that coin is consolidating. I have my levels. I know you guys know from 2 days ago that my position that I'm looking for 320. I'm okay as long as coin stays above 302. Okay. And guess what happened? They tried to stop me out here at 302. I added some contracts here. I'm not adding contracts here. Does that make sense? Okay. So you want to determine those lows first before adding contracts, not when it just keeps dipping like this. Because this, what happens with this is that if you say, all right, I'm going to buy more here and I'm going to buy more here. I already bought more here. All right. Yes, it's a higher low that technically looks cool, but at the same point, you're just risking more and more and more. And what happens with contracts and time decay is that you get a little bit more impatient every single day. It does this to you. Okay. So there are ways to dip buy per your technical rules. All right. So let's just do another example. Why did I add more sizing into Palantir earlier? All right. Palantir is not bad. It's still holding above the lows. All right. We know it. I was telling you guys, watch 152 yesterday. It hit 152 this morning. All right. And you had a nice candle right back up. My contracts are flat. So in this situation, looking at the 5-minute chart, I know it's somewhat consolidating here. I obviously know that if it breaks 152, that's going to be my stop, right? So let's just say I want to put $10,000 into Palantir position for 160 calls September 19th. Let's say that is my goal, right? To put 10,000 into this position. Obviously, when I take a position, I need to make sure that this is the lows, and it actually wasn't. So when I bought here, it actually came down and then did this. Okay. So this is where I say, okay, well, all right, I'm in for, let's say $2,000 for now. Okay. Let me test the waters, make sure that there's a higher low here, even on a comeback. Okay. Even on a retracement back, because that's typically how stocks work. Once it rips a couple candles, it always comes back, right, to scare you out. So, and then boom, right? So I actually didn't add any on strength here. I'm actually adding on consolidation. Okay, I was pretty green on this trade earlier, but now I'm sitting here. Okay, now it's just consolidating. It's going sideways. Hood is not doing anything today. Some of your meme stocks are just going sideways today, and so this is the time where you can be patient with the trade and size in. Okay, this is actually a good place to size in, unless you say, of course, you know what, this is too choppy, I'm going to get out. And that's okay too. But I choose to stay in the position because it did make a move today. It's flat on the day. There are technical reasons why this stock can still go to 160. Therefore, I'm going to size in to the range buy. All right. There's a dip buy and there's a range control buy. All right. Range control buy, let me give you an idea. All right. So what happened with QQQ before Powell? All right. Range control, right? Okay. So this is where you buy contracts, right? You have a clear set rule that 558 is your stop, right? This is range control. And then what happened? It jumped up, all right, came back down, tested everybody's patience. Powell came out and boom, take profit, right? Start taking profit. All right. I would not strength buy on that candle. That's not a candle you want to strength buy on. But this was a range buy. Now, we did get back in last Friday after Powell was done. I did get back into the Qs, right? And I've had these September 12 calls since last Friday that I've been range buying, right? Buy some more here, buy some more here. Oh, look, double bottom, buy some more here, breakout. Okay, sell some. All right. And yesterday I didn't get to buy, obviously, because the market's closed. So I still held the position and, and all that stuff. So, and then now that it's breaking out, I have an upside target of 575.81. That target obviously hit. I have an upside target of 580 at this point. And at this point, I'm done buying the Q. I'm trimming the Q, not buying more. Now, there is a opportunity. I think that if they do swipe this down later today, and let's say come back to 574, I might even actually open a new position on the Qs. But let's just say, going back to our example, 10% of your portfolio, $100,000 portfolio, $10,000, right? 2,000 here, 2,000 here, another grand here, another contract here. Fine. Let's range control all they want. And then we take profit on the way up. Can things break down? Yeah, absolutely. Can Q, maybe Q didn't make this move, and it's like digging around the 567th, and I'm out. Right? We never know what the direction of the market is, but if it's a range and it looks good, you have a nice breakout on the 1 hour, take it. All right. Just take profit on the way up. And obviously, every time it hits a new high on the day, right, you'll see me trim QQQ. Does that make sense? All right. So there's a dip buy and there's a range buy. All right. So you have to determine up front, what is that dip that you want to buy, and what is that actual dip that you're saying, no, I need to get the hell out of here. Okay. So let's check Tesla real quick, see if I'm right here. Okay, so Tesla's doing a slow little melt, bear flag melt up here. Be careful. That's not necessarily a buy signal on Tesla. All right, so you can see it's starting to already weaken out here. But we'll see. All right, but or maybe let's say you did buy this dip. Now you want to actually maybe even size up a little bit more. Not more than $10,000 per our example, but you want to size up a little bit more, okay? Because you feel like there's strength coming, all right? So that strength buy would actually be, okay, well, we know there's a support, pre-market low support, or yesterday's low in the after hours, all right? And so that's what's happening. That's a little bit of trouble area. So let's say you want to size in, and you can, all right? If that's your risk and that's how you want to play it, your technical rule. Let's say it closes above 345 today. Let's say it closes above yesterday's or PDL. Okay. If it does that, then okay, that potentially warrants a buy into Tesla or adding into your size. Okay. What's not a buy is that it gets sliced down to 340 today, and then you say, like, oh, I'm just going to tough it out. Right. Don't be like me with coin. All right. Well, look at coin, back green. So this coin thing is just irritating. It is irritating. Okay. All right. Am I actually buying more because I added Palantir earlier? Am I buying more? Not necessarily right now. It's in a range, but it doesn't mean that you need to keep buying the range, right? This one on the 5 minutes ranging, this is something worth buying here when we talk about QQQ before Powell. Right? This is worth buying. This range over a few days is actually worth buying into. And of course, I know contract date, contract expiration, expiration and your strike price matters. I totally understand that. Okay. We'll talk about that another day. All right. So I hope this is making sense so far. So you got a dip buy, a range buy, and a strength buy. That strength buy, that if you do, need to have a very clear set of rules. You need to say, okay, because of this technical reason, this is why I'm going to strength buy. All right. Are there opportunities where, let's say, for example, you're in a 0 DTE, okay, and you're going to flip the SPX contracts, or you're going to play 0 DTE on the SPY because you are just built that way. All right. And you want to do this thing. All right. Let's say, all right, for example, you saw this candlestick, right? Boom. All right. Okay, so let's say you bought this dip on a SPY, all right, and your target is, for example, this FEG, all right, which they actually took, right? You see this monster candle here, took it up here. Obviously, you're trimming down on this position, and maybe what you do is you start to strength buy because you know it's moving up, and then it's actually inversing that FEG. So what you could do on that 0 DTE is strength buy on this candle. Right? You want to strength buy on that candle, right? Because it's inversing your technical rules, whatever they are, don't know. It's the technical rules tells you that this is actually making a move, okay? And this is the strength candle to buy. This is probably not the strength candle to buy. this is probably not it either. I know a lot of people look at this and be like, okay, this is a potential average in right here, this little range right here. You can, but I rather feel a little bit more assured with the wider candle body and it's above or inverse the FEG. All right, so in this case, it did. Okay. And market's choppy again. All right, so let's continue our lesson here. So those are the three ways to buy. All right, again, I repeat myself: $10,000, you're a 100,000 port guy. 10,000 is your max position, or it's 5,000. That's okay too. The smaller, you know what? I often find that the smaller positions that people take, the longer they last in the market. You don't have to put 10%. It could be 8,000. It could be 8%. It could be 5 to 8%. But make up those rules now, all right? So therefore, you don't lose your ass in the market, okay? Especially when it comes to options trading, right? And so when you enter that trade, when you enter Tesla, when you enter SPX, zero DTs, whatever it is, right? You got to determine where your levels are first and where you're buying before you're entering that trade, right? And sometimes you have to really meticulously plan that trade. Have you ever noticed that the trades that you have a nice thought out plan for are usually your smallest losers and your biggest winners, right? Am I right? Of course I'm right. It's the impulse buying, right? It's the impulse, it's the FOMO, it's the all-in buy initially. 3 ways not to buy, which kind of leads to my next topic. Those are typically your worst losers, right? Those are typically your most impatient, right? You buy in, and all of a sudden you bought Tesla shares at 355, and you stop loss at 354. Right? Then why did you buy in the first place, right? Or you bought Nvidia at 176 and you got to stop on 170. Why are you in the position for a $1 stop loss, right? Or whatever it is. Okay, so there are ways to buy, and there are ways not to buy. Number one, all in, right? We talked about this earlier. So what happens is on Tesla, because whatever reason you thought 355 was a great buy, all right, even though it was a double top. On the 4 hour, even though the RSI was too hot, etc., you still went for it. Okay, fine. All right, so 355. Okay, so you put 10,000 in, and guess what? Right? Even though I've been telling you, don't buy Tesla up here, right? And you still did it, right? And now you're stuck in a position. Okay, don't put yourself in this position. We know that Tesla has been hot. We know that certain stocks have been really, really hot. And you keep doing this, and then this is how you end up with losing trades, especially when you put 10,000, because guess what? 10,000 is 10% of your portfolio, right? And you put 10,000 into Tesla, let's say September 15th calls for 360. All right, you're out the money by $20. You're already down 30% on the position or more at this point, right? Okay, 35% on the position. All right, so you're down $3,500, which is 3.5% of your portfolio, and you are running in fear, right? You're like, oh no, what do I do? What do I do? And what typically happens is that as soon as Tesla swipes down 300, and this is what happens. Okay, here you go. You say to yourself, all right, I'm stuck in a position. I'm down 35%. I'm just going to put a stop at 340. Okay, I'm going to put a stop at 340. I will eat the loss. Okay. And guess what happens? Anybody want to guess? Very good. They swipe it down to 339 and they run it right back up. Okay. You lost that position because you didn't have a plan initially. Like you should have had a plan up here. You don't plan down here, right? Does that make sense? Okay. All right. And then as soon as they take your loss, take your contract money, they bounce it right back to 345. I bet you anything. Okay. All right. So again, folks, there are good ways to buy and there are bad ways to buy. All right. Losing buy. All right. Like I said earlier with coin, am I buying more coin because I'm down on position? No, I'm sorry. It's too expensive. Don't want to put more risk on, and that's okay, right? Okay. Losing buy is something like this. Let's talk about open. Oh boy, I'm going to piss off some people here. All right, losing buy is something looks something like this. All right, so everybody bought into coin. Let's say you bought into open at $5.83 as an example. All right, the stock is down since its highs, right? Roughly 29%. Okay. And everybody's still saying, buy more open, right? Social media says, buy more open, go, Eric Jackson, I'm going to camp out at Drake's house and please, Drake, buy one share. And then you bought into this hype that it's going to $82. All right. But this is what we call losing buy and buy just because somebody says so. Okay. Or you're just simply averaging down. Okay. Would you average down on a contract that's down 30%? I hope your answer is no, right? When you're down 30% on a contract, you're probably not averaging in. Okay. I've done it before. It kind of sucks. All right. So I'm just telling you now. All right. So the stock is down 29% from your buy. And you're just like, okay, well, you're just going to buy just because, right? A lot of people do that. A lot of people get bagged this way. You might be right. I don't know. You might be right. Maybe open does go back to 583 and you average down and that's part of your trading plan. Great. Fantastic. Congratulations. But obviously the stock is in a downward momentum, right? It's lower lows and lower highs, right? There's no momentum here. So what you could do, all right, let's just go to the 4 hour. Let's say you actually just want to buy the stock because you just believe in it. All right. Okay. No, you can make the argument 4 hour potential flag. I'll give you that. Maybe. All right. So you got a FEG here. All right. And really, you should actually average in, not here, because it's kind of bear flagging on the 4 hour here. And we know that there's a massive, right, FEG to be taken down here, down to $3.72, which is my downside target. All right. So this is probably an area where you could say, all right, I'm going to hold on to the position. I will strength buy in the 448s. My average might not be as great as buying at 422. Maybe I'll inverse it and buy at 477. Something give you, you know what I mean? Buy the strength, right? Buy the strength here, okay, on this type of stock. Or, right, buy the range. If you feel like, technically speaking, this is a great range to buy, okay, fine. But guys, even if that was the case, okay, and you really thought this company was great, okay, it's still down 28% from its highs. It's just not worth it, right? When you entered the stock at $5.80, even $5.50, maybe you got a better average. You knew your stop was like $5.20, right? Like $5, something round figure. Okay. Obviously, it's going to have trouble, right? You take a look at open right now. It's on a 30-minute. It's just lower lows. Okay. So I think eventually the shorts maybe get in control, right? So again, 3 ways to buy: dip buy, range buy, strength buy. 3 ways not to buy: all in initially. All right, $10,000, Tesla 355. Let's go, right? Losing buy, which is what I just explained on open. All right, buy just because somebody on FinTwit said so. Okay, so look at coin, man. Just got to be patient with coin here. Yeah, look at that Palantir buy. All right, so let's take a look at coin right now, or let's look at Palantir right now. Okay, all right, range buy. That's what I did. Buy the range. Okay, it could work out, it could not. But we as traders, we put on the risk, right? The right way. We put on risk the right way, not the wrong way. All right. So Palantir getting a little pop here, whatever, no big deal. All right, coin. Stupid coin, 306 again, jumps $6. You know, it's extremely range bound, all right, with coin. So therefore, just got to be patient. Okay. Did you guys buy NVIDIA 176 yesterday? All right, I sent that alert yesterday. Maybe not. Maybe you guys didn't see it. Okay. So NVIDIA, fantastic. Bought more shares at 176, working out just fine. All right. We talked about the levels yesterday on the 4-hour chart. Took all the levels. Now it's moving back up. Looking beautiful. Okay. All right, folks. That's it. That's the lesson today. I hope you guys got something out of it. Ask me questions if you like. Drop me a note if you guys liked it. You know, if you guys got any questions, please feel free. Ooh, Q just made a new high. Okay. Anyways, I will be back later. Thanks.